Hey, it's Rav. Welcome to the Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. The challenge often is that we take our precious time, we go to work, we get paid in order to eat. But imagine a life where money could make you money so that you could work a little less, have more time for those things that matter most. Family, friends, engaging in some sort of purpose greater than yourself. That's what this show is all about, teaching you how to grow your money. Don't go anywhere. We'll be right back.
A lot of our focus is on the acquisition side because, as you know, Rav, in any market, you make money on the buy. So if you buy right and you execute per your plan, it's a solid deal.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hi, it's Darren Mitchell from Control and Compound. If you're a real estate investor or business owner, you know the cookie-cutter approach to financial planning doesn't work for you. You've got to be in control of your money. You've got to save and store your money differently than other people. At Control and Compound, we are the wealth coaches for real estate investors and business owners. We show you how to save your money, grow your money tax-free, multiply your money tax-free, and spend it tax-free. To learn more, please check us out at controlandcompound.com/everydayinvestor, where viewers of this show get a complimentary education session.
Hey, it's Rav. Welcome back to Everyday Investor. We're talking to our good friend Babar. Thanks for watching. Today we're going to learn how we can make money investing in the BRRRR strategy, the R5 strategy. It's where you require a property. When you renovate it, you rent it, you refinance, and you repeat. And the refinance part is the really exciting part because you can pull a lot of money out. Babar and his team are experts in that. Thanks for being on the show. Appreciate that.
Rav, thanks for having me. I've been a long time follower of the show, so it's an honor to be here.
Well, thank you. I really, really appreciate it. We're finishing, I think, 20 years. We started 2004, and so that's finishing 19 or 20? I'm asking the producer.
20, yeah.
20, yeah? All right, so anyways, it's been a long run, and really enjoy being able to nurture people, help them, educate them, nothing to sell. And so it's important to have good guests such as yourself on the show. Here we are in the fall of 2023. A lot has happened. What are your thoughts? I mean, let me ask you this. What do you do? What do you like to specialize in? How did you get involved? And then what do you think in regards to the state of the economy? Let me ask you those questions first.
Yeah, absolutely. I'm an active real estate investor. My business partner, Faizan, and myself, we have established a business around real estate investing. So we really look at investing as, business in terms of sales, marketing, operations, deal flow, raising capital. So, a lot has changed in the market as we've seen. This is a new cycle that a lot of investors are seeing for the first time, right? They haven't been in the market long enough, ourselves included. Essentially, as much as the interest rates are going up, we see a lot of opportunity, especially in the primary markets like the Greater Toronto area where we are based. For the longest time, we were priced out of the GTA, and a lot of our focus and investments were in the Niagara region, right, where the entry point was still, reasonable, where, you could make a decent profit. Our strategy is very much around buy distressed, off-market properties, force appreciate, and refinance. So in terms of where we are currently at with the market, Rav, we're seeing a lot of opportunity here in the GTA. And so if you are ready to, keep your eyes open. You will find those gems in A+ neighborhoods that were impossible to find an opportunity in.
Yeah, well, that's the key. I mean, I think, listen, the fundamentals are here in the GTA. There's more demand than supply. Obviously, the government can do whatever they want if they to manipulate the market, such as raising interest rates. But it's now a buyer's market. It's turned into a bit of a buyer's market, generally speaking, and there is lots of opportunities. This is the time you wish you had a lot of cash on hand to be able to invest. So absolutely. So what are you doing now? I mean, you just moved into this property. Your boxes are not even unpacked. Thanks for doing the show with me and while you just moved in. But this property that you're in, this is the one we'll talk about after the break, where you actually bought the home and then rehabbed it. And you were living in it, so you didn't necessarily rent it out, but you were able to take out a lot of money, and we'll talk about those numbers. But what are you and your business partner looking for right now? What are you actively doing now?
Yeah, so actively, we have a couple of projects on the go, some in the GTA, some in Niagara. We stopped, initially we used to do flips, back when the market was appreciating. We stopped with the flips. So we've now started to get back into some flips. So we just wrapped up one flip in the Milton market, right downtown Milton. It's a single family detached home. So that was a success. Then we are just closed on another flip in Oakville. So that's also another project that we're starting. And in terms of what is just finishing off at the tail end is a 4-unit conversion. So we took a single family home, essentially it was 2 semi-detached front and back. We converted this into a legal 4-unit. And we're going to be, basing it off like a short-term rental plan based on our finishes, based on the amenities. And then we also just finished up a 3-unit conversion with a garage, and it's got a deep lot. So, with Bill 23, that allows us to add more units depending on the frontage and the setbacks. That's our, part two to squeeze more juice out of that.
Nice. And so when you do these things, you're partnered with everyday people such as myself. So if Rav said, hey, Babar, I have, $50,000, $100,000 to invest, can I come alongside with you to do these projects?
Absolutely, Rav. And that's really how we've based our business model. It is on partnerships. It is on joint ventures. It is not possible for us to scale at the level of deals that we're doing, with just our own capital. So we do use our own capital, but a lot of it is an opportunity to partner with someone like yourself. And that could look like, a joint venture partner on the equity side. That could look like just a private lend with a fixed monthly interest. So, those are typically the two options that we engage in.
Okay, so on the equity side, you mean if you and your partner make $1, I make $1 equally. And on the debt side, maybe I don't want to take that risk in terms of profit splitting. Maybe I say, okay, here's $100,000. I want 8% or 10% fixed return. I lend you this. I like what you're doing. I feel like there's very little risk. And so I can lend you money, and you'll also structure that as a debt deal, correct?
That is correct.
Okay, great. Tell me about the flip really quickly. So when did you do that flip in Milton?
So we bought that flip earlier in the year, like around the January, February timeframe.
Okay.
It took us about 4 months to renovate.
Yeah.
And
what was your purchase? What was the purchase price?
$560.
$560 purchase price, and how much did you put into it?
About $60,000.
$60,000 for reno. And what would you sell it for?
For $760.
So you're into this deal for $620. You sold this for $760. So you profited 140K?
Correct.
Wow. In about 4 or 5, 6, 7 months? Like 4 months to do it,
Correct.
and then you had to sell it, closing. So in just over half a year, you were able to make $140,000. Now the question is, how did you buy this property for $560? What was there? Is there a certain systems you have in place to be able to find distressed properties or people that need to get out? Or give me a little bit of, without revealing too much from the seller and so on and so forth, respecting privacy. Tell me how you were able to acquire this property for $560 in Milton.
So that's a great question, and really a lot of our focus is on the acquisition side, because as you know, Rav, in any market you make money on the buy. So if you buy right and you execute per your plan, it's a solid deal. For us, a lot of this acquisition is based on off-market networks and relationships that we've developed locally here in the market, as well as with certain wholesalers that are actively marketing and looking for properties that we have a criteria around. So this property we purchased off of a wholesaler, and as soon as the wholesaler actually found the property, he knew who to call. So this wasn't even advertised much. There was a relationship established, and we took the deal.
Yeah, so for those that are watching, a wholesaler is somebody, this is their full-time business. They scour the land, they put out, little yellow ugly cards, we'll buy your house cash. They go into properties, they help people, kind of get out. So Babar bought that property for 160, but the wholesaler, they probably got this property under contract, let's just say, for even 550. We can just call it. And so then therefore they made 10K just by flipping the paperwork to Babar, and that's okay, 10K, because they're doing 30, 40, 50, 100 of these in a year. Wholesalers do really well. Really interesting. So when we come back from the break, I want to talk about the R5 strategy, or the BRRRR strategy. And see what you did and how you made money, and we're able to even move into it. We're actually getting a first-hand view of the property there in Burlington. Don't go anywhere. We'll be right back. Hey, it's Rav. A few years back, I learned about trading stock options by taking the Theta Trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I am not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to the Everyday Investor. We're talking about how we can make money investing in the R5 strategy. What's that, you ask? It's the BRRRR strategy. Same thing, but R5 sounds a lot better. It's where you require a distressed property, you renovate it, you rent it out. Now you go to the bank, you refinance, and then repeat. We're talking to my friend Babar. Him and his business partner do this all the time. The other option is you don't have to refinance it, you just sell it, and that's called a flip. And they were able to make over $150,000 this year doing one in over 6 months in the Milton area. But right now we're going to talk about this, the R5 strategy here in Burlington, and you decided not to rent it out. You decided, wow, the rentals were so nice, I want to move into the property myself. So that's kind of cool. But here we are in Burlington, and you acquired this property when?
So I acquired this property for $810,000.
And how long ago was that?
In March of this year. So
March 23. And by the way, the last day of the year, Peter's the producer. Last day of the year, 1, 2, 3, 1, 2, 3. You like that? 12, 31, 23, 1, 2, 3. See, guys, you watch the show, you don't just learn about investing, you get also some other random facts. Okay, so $810,000, you did that March. And what was market value at the time, would you say, of that?
So renovated properties in and around the neighborhood were selling for between 1.3 and 1.4 million.
Wow. So again, how did we find this one? Was it you getting a haircut and the hairdresser was giving you a lead on a nasty divorce, or was it the mailman that you talked to, or was it a wholesaler? Like, how did you get this at such a distressed price?
Yeah, and you know, again, goes back to like the story of building those relationships. So this is also from a wholesaler that we picked up. You know, we had already informed them that this is an area that we were interested in. We were targeting properties in the area. So when an opportunity came up, you know, it was a quick to connect and then quick to close the deal as well, because we understood what those numbers look like.
Okay. So when I ask you what's the cost, I'm including, you know, the interest that you had to pay on a mortgage for a while, the closing costs, the rental fee. What was the overall cost to get you to a place of refinance? How much did we spend?
Yeah, so I put in about $120,000 for renovations.
Okay, so $120,000. What else? I mean, like I say, it's all in kind of included. You probably paid, like, was this all cash or did you take a mortgage?
This was all cash.
Oh, was it all
right?
cash?
So I did have, yeah, so sorry, the reno is cash, but the purchase, I did have a mortgage. So I did have an interest-only mortgage. So the financing was key to this as well, because, you know, no typical A lender will lend on a distressed property. So we knew of a lender that would give us an interest-only mortgage in exchange for a 20% down payment. And then we were able to refinance out of them to an A lender. That's basically how the lending, the financing plan worked.
Yeah. Yeah, but I'm just saying, even if we did this cash, it was phenomenal. Just like the Milton property, if it was all cash, yes, it's still phenomenal, right? So, you know, with closing costs, so on and so forth, let's pretend it was an all cash deal. You're 120, 125, what is it?
Yeah, call it 140.
140, okay. So we're into this all in for 140. So here we are now. I got a brand new property in an area where they sell for 1.3, 1.2. I have a brand new property for under $1 million, correct?
Correct.
Okay, so what did the bank, which always comes in lower than what real market value is, what did the bank appraise this at?
So the bank appraised it right on 1.3 million.
1.3 million. So you had a lift of $350,000.
Correct.
Now that's the bank. So the bank gave you that. How much could you have sold it for if you wanted to sell?
I think realistically, where we are currently at in the market, if we listed for 1.3, we could have received anywhere between 1.25 to 1.3.
Okay. So my question to you then is, I mean, you just loved it so much that you decided to move into it, because you and your partner could have made $300,000 by selling this. So what was the thinking?
It was going back to our initial objective. I was in the market for a home for myself in the GTA. I have a young family, so my criteria was a neighborhood around schools and parks. So this is where we started targeting this market. And when I brought this deal, it was with the intent of moving in myself. Okay, that's what happened. Okay, great. So this $140,000, because that's the money needed, plus 20% of the 800, another 160. So that $300,000 cash, where did you get that from? Did you get that from the RAV types out there and you did a debt deal with them or an equity deal with them? Is that how it happened? Yeah, that's how it happened. So I got somebody like yourself to do a debt deal. and basically I returned their capital plus the interest in less than 6 months.
Okay, so what did they lend you? How much? 300?
Yes.
So they lent you 300K. So Rav lends Babar 300K. What was the percent?
12%.
Wow. So 12%. So I'm making 36K, but you paid me out in 6 months. So I made $18,000. Yeah?
Correct.
Okay, so for you those that are watching that wants to partner with somebody like a Babar on a debt deal, Rav in this case lent him $300,000. It was a 12% there, and that would be annualized, but he only needed it for 6 months. So therefore, we split the 36, $18,000 on a debt deal. No, that's fantastic. I don't know how to work this thing. Let me see that. There you go. Delete. Okay, so you are into this deal for $950,000. The bank appraised it at 1.3 million. Therefore, you could go to the bank. Well, not could. You did. I'm assuming you went to the bank and said, "Give me all the money. I want the biggest mortgage." And how much money were you able to pull out of this?
Yeah, so the bank gave me 80% of 1.3, so about 1 million was the mortgage. And so I was able to essentially pull out around 350,000 as a cash out refinance. So I was able to pay back my investor on the debt side. So we recovered our down payment, recovered our renovation and our holding costs, and then some, right? So we also made a profit. So when I closed, like when the refinance was over, I got a check in hand, as part of my new mortgage.
Yeah. So basically, you're into this property for nothing. You paid back the investor. The Rav type is happy. You have an extra 50 grand there because you're going to go winter with your young family in Turks and Caicos for a couple months this year, and you have $1 million mortgage. And we won't get into whether it was variable and your rates are high now or whether you locked in on a fix. That's a different discussion for a different time. But you were living in a brand new house, for all intents and purposes, with $1 million mortgage that you just walked into, no money down per se.
Correct.
And that $1 million mortgage, like we said, the property's worth about 1.3, and this didn't happen. It could only happen, rather, if you partnered with your investor. And even more importantly, because money is not that hard to find, but more importantly, teamed up with a great wholesaling, different wholesalers, I assume, and people are now knowing that you execute and they bring you the deals.
That's exactly it, right? The R5, I think the power of velocity of, moving your capital and being able to rinse and repeat, I think from an outside investor standpoint, that's really what you want to see is the track record, the credibility, the case studies, the examples of how you have, moved your capital and what you've acquired. Because this is a property that I'm, living in, but a lot of the properties that are after refinance, we would just keep them as Airbnb, short-term rental, just to generate some higher cash flow in the current interest rate environment.
Yeah. No, it's great. And for the investor, they got their money back after 6 months. Of course, they want to do it again with you. And you can move into it if you want. You can sell it and call it a flip. You can hold it and be in it for no money and now get a little bit of cash flow. Where the tenant is paying everything that covers, mortgage, interest, taxes, all that kind of stuff, principal and taxes. And so this is kind of the system, but you mean you're also dabble in the multifamily space. Quickly before we wrap up, how does that work? Is it just the same thing but just bigger numbers?
Yeah, in a nutshell, it's the same thing in terms of, we're buying properties or buildings that have a potential to increase their rent, potential to optimize the expenses. And, at the end, we want to refinance and pull our capital out. So, from a strategy standpoint, very similar, just at a much larger scale in terms of the number of units.
Fantastic, brother. Listen, I appreciate you being on the show. Time flies when we're having fun, when we're being nurtured. Stay in touch, and good luck on the next ventures that you do. And again, if you're an investor looking to partner with people that are making it happen, it's the Babars out there that are doing that. Again, my friend, thanks for being on the show.
Thanks so much, Rav, for having me.
And now it's time for our teaching tip of the week.
Hi, it's Darren Mitchell, and this week in the teaching tip, I want to answer frequently asked questions we get about infinite banking or infinite banking policies. Number one, can I use corporate money or corporate dollars? And the answer is absolutely yes. Now, I'm going to put a little caveat with that. Again, talk to your wealth coach, make sure it's structured properly. Ideally, we want a holding company, not an operating company, but we can roll it over. But yes, you can use those tax-efficient corporate dollars to fund a life insurance policy, an infinite banking policy inside the corporation, grow it tax-free, access those loans tax-free for the business. Death benefit's going to flow out tax-free, and the death benefit, all or most of it, will actually flow out of the corporation direct to your family, assuming they're going to inherit the shares, completely without tax or almost no tax, depending upon when you die. So yes, you can use corporate dollars. The next question is, do I have to take loans against an infinite banking policy? Absolutely not. The policy on itself, standalone, it's a great asset that's going to grow tax-free. It's probably going to cash value right now. You're probably looking at 4 to 5% plus tax-free growth, plus the death benefit. So you don't necessarily have to take a loan. If you want to take advantage of those opportunities, you can. Some people just use it as their emergency/opportunity fund, and if the opportunities don't come, it's just a great place to store money all on its own. The next question I get is, Darren, what if I'm uninsurable? Well, if you're uninsurable, all you need to do is go down the street, find some guy that looks insurable, and ask him for his health. Well, no, you can't do that. But what you can do, let's say you're uninsurable. Do you have a spouse? Do you have a child? Do you have a business partner? Someone you have a connection with? Ideally family member or business partner, you can actually own an infinite banking policy on that individual. You own it, you control it, you access the loans, you cancel it, take the money back, you benefit from the death benefit. Everything about the policy is yours. We just substituted who the life insured is. So the answer to that is yes, you can. Another question we get is, Darren, infinite banking policies, they sound too good to be true. Like, how come everyone isn't doing this? Well, we do get that question a lot. And the answer is the people that know about it are doing it. If you look at what the wealthy are doing, if you look what the big corporations are doing, what the bank themselves are investing in, it's high cash value life insurance. So we like to tell people, once people know about it, they tend to do it. But the banks can't sell it, so the banks aren't going to promote it. In Canada last year, over $1 billion went into cash value life insurance. So it's not a small thing, it's actually huge. The next question we get is, Darren, what if I go bankrupt or get sued? What happens to my infinite banking policy? Well, if it's set up properly and it's personally held and you get a family member as a beneficiary, you could have creditor protection. You could get sued or go bankrupt and have $1 million cash value, and the creditors won't be able to access your cash value. Again, set up correctly, a couple things, but if you know what you're doing, you can set it up so you have creditor protection, bankruptcy, lawsuit, that money's protected, allow you to rebuild your life. That's it for this week. Thanks for watching.
And thank you guys for watching. Without you, we would not have a show. Make sure you go to everydayinvestor.com to watch this show again or any other ones. It's kind of like on demand. Until next week, we'll see you same place, same time. Honey, I love you. I'll be home soon. Bye, everyone. Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more.